Hi, I'm Howard Penney. I cover the restaurant space here at Hedgeye, and I want to talk about one of my favorite ideas, Panera Bread. Panera is on our best idea list as a short, and they're about to report earnings tomorrow night, Tuesday evening, April 29th. I just want to get ahead of the earnings report because I think the stock is a little bit ahead of itself. I want to talk about four things actually. I want to talk about traffic trends, return on incremental invested capital, expectations for the balance of this year, and then the earnings multiple. First, turning to traffic trends. The most important thing about any restaurant concept is, are they generating more customers year over year or not? And as you can see for Panera, looking at that red line, for the last 2 years, traffic trends have been decelerating to where we're going to see a big decline in traffic this year. And street expectations are for a nice recovery through the balance of this year, and I don't think that's going to happen. Management's doing a lot of things to address the issues, like introducing Panera 2.0, which is fixing the ordering system for how you buy food at Panera, but that's not going to happen immediately. That's actually a fiscal 15 initiative. So what we're going to look at now is return on incremental invested capital. So all the things that Panera is doing to fix the business are going to increase expenses and not see an increase in revenues. So it's going to drive down margins and drive down what I think is also a very important statistic, return on incremental invested capital. As you can see from this chart, it correlates very nicely with the stock price. And as we're going to see through the balance of 14, return on incremental invested capital is going to continue to decline, putting pressure on the stock. So next I want to turn to what expectations are for the balance of this year. And as you can see from this chart, we're looking at revenue growth versus earnings growth. And while this next quarter looks to be very ugly, street expectations are for the third quarter for revenue growth for earnings growth to be faster than revenue growth, so seeing margin expansion. Again, I don't think this is going to happen, so after they report earnings tomorrow night, I imagine estimates continue to need to come down. And lastly, it's a look at valuation. So as you can see here, here's a PE chart of Panera Bread for the last 3 years. If we take a midpoint of the range roughly around 18 times, and it's traded anywhere from 14 to 22 times, my range of where I think this stock could trade is anywhere from up 2% down 30%. And given what we're going to hear tomorrow after the close, I think a down 30% is a more likely scenario. I'm Howard Penney. I cover the restaurant space here at Hedgeye. You can reach me at Hedgeye HWP.